Somebody's asking a question about the so-called vacuums. He says, I still don't get the vacuum theory. Well, it's not a theory. For me, it's a pressure building up of no price. So as the market goes up, it's going to hack out this controller. It's about this hole that you have that's been forming, like the kind of like you're moving away from previous prices, so you're seeing the market do a move, on your chart, but it's actually creating this drag behind it. I think where it's moving too fast. It's more likely to retrace. So when your orders last various time frames, then it can capture various spike. How long does a spike last? Nobody might. It's great to buy the spike, but when it's down there and you're in bigger than you'd want to be, and it's bobbing around, and it's a good trade, but you're a little bit leery because everybody's telling you it's in a downtrend. But then the other part of your brain says, but the market's arranging, so why can't I just scalp the range? And maybe I do get in on the hedges. So if you could build a hedge on this currency, you can see where you build it. It's when the market's just barely moving. The time not to build a hedge is when the market's screaming up or down. Hopefully you're in it cashing out, or you're waiting to get filled on you're trying to estimate the next price pulse in some regard so that you can take advantage of the momentum dying out and kind of get this, sinking with the jump rope. If you can kind of anticipate possibly it's going to sell off 10 pips. Don't be too strict and just come in if need be. So here's the 5 p.m.'s coming. We've got 15 minutes, about 17 minutes to go. So I'm going to buy some of this euro, and the spreads are going to get kind of wide, but I think we get a pop here. Cashed out here in the when we finally made it up here, I got out. Everything went flat here. So then I came at limits. Okay, buy. Came in all the way to here. Then I got barely a bounce out of this. Down $400. Then I had to come into $1,000 of margin here. It was my max. So here I'm at about $300 of margin. I'm down about $200. Now I'm down about $300, and I'm using about $700 of margin, and then I'm just really loading up. And then here comes Janet Yellen. She trips that. I already had cash outs there, but I just kept dropping this this script that goes 2 pips, 3.5 pips, and it's an 8-hour script. So when you drop that, you're just stacking up this with a 30 pip stop. So if you have a 30 pip hard stop on all these tickets that keep on filling up, and here's the another vacuum. This is just a deeper one. So how do you know? Yes. How do you know which vacuum fills next? Well, it's going to be this vacuum or this one. You don't know. They might just dip into here, trap a few goobers here, then rip it down. If you've ever been trapped, you probably know what it's like. You put your buy stop here, or you buy at the market because you got confirmation it went up, and it looks good, and you put your stop in, and then or you get to here, you get out. You realize maybe that this matters. This 2-hour rooftop. All right, so this vacuum is more important than, say, this little mini vac here. We fill that, okay. Now we go very low true range. I mean, these last 3 bars, forget about it. That's super tight. That was the obvious entry. So I load up there. And I cash. I literally cashed out here because that was the Asian price pulse, you know. Then I load up here. Then I just let it go, and then I cashed out because I saw as soon as they tripped this, if you go to the 4-hour chart, it was just a trap, right? There's more fake outs than breakouts. So why trade breakouts? Well, I'm talking about tight range breakouts. I'm not talking about this kind of goober breakout where it takes out this and people are buying this on confirmation. That is not the breakout you want to be in. You could be in that, but not your whole. You're not going to backtest this breakout and say breakouts don't work. Look at this breakout, doesn't work. I know. How about non-directional trading? If you don't know where the market's going, spreads are going to get nasty now. We got 15-minute warning. Look at the tick chart just went nuts at 15 minutes. Gee, I wonder why. All the 15-minute robots that are coming in. Whatever the fuck. Somebody's coming in. It's going to be crazy. I don't know what Yellen said, and I really wouldn't even figure it because, you know, once it got below here, I started really buying, and once it got below here, I started really buying, and I cashed out. Well, anything I wanted to cash out, I could have cashed out. Also, this is like a progressive vacuum. This is the, in my mind, this is the Garley. This hole. I'm not drawing it from top to bottom, swing high to swing low. That's bullshit. If you don't mind this vacuum, if you don't pay attention to this hole that's itching to get crushed, so as it fills this vacuum, it's kind of like, okay, we're filling it. This is the cup. This is the handle. You know, I don't even see how people can't see this. The problem is the bulls have trailing sell stops, and once they trigger, they cascade. Then somebody asked me about the cancel replays. The only way to cancel replays here is to keep dropping a script that says, if you're a bear and you want to get in on sell stops, you'd have to say, you hit a button and it goes, okay, 1 hour. Every hour you'd have to keep setting in a 5 pip deep sell stop. You're asking the market to go down 5 pips to confirm that it's going to keep caving in. But you don't know that. I'm buying somewhere just before the spreads get bad here, so I can put them wider stop now. I get into like another $200 here just before the spreads getting real nasty here at this broker. I better go offline too. But yeah, it's I can only pay attention to one of these pairs. There's so much drama on this thing. You could have walked this thing up with sell stops like a goober, like a true tard. You could have just walked that stairway to hell. Bam. And even the non-directional guys are killing it. They're waiting for the small 1 hour bars. That's doable. 1 hour chart's doable, makes sense. Here's your top become a bottom. You could have bought that on pullback last night. So I added about 300 in margin here. So it's already up from these. You know, some of these got tripped, and here comes the sellers, obviously. You know, they're selling, accumulating a sell position, comes back to their breakout point, they get out. It's a revolving door. This vacuum is a really big deal, and it never fills. If you got sell limits up here, ain't gonna happen. So you have to take what the market gives you. If you sell against you'd be selling in it. If you're a channel trader, you're selling on the channel, right? That's your exit. Sure, it goes higher, but hopefully you had limits above here that to really go nuts. I'm gonna buy some right now. So I'm gonna load up here. Panic 11 minutes to the closing of the bell. I'm just going to try to get a burst out of the gate here. Try to make 7 pips. Try to make 9. Trying to get to $8,000 by the time London opens. Trying to make $400 here going into the end of the day. Tick chart looks great. We just so in my mind, anytime I see this sideways action, there's a vacuum forming below and above. Which one fills first? But see how they trap the breakout trader. They put a buy stop here. Come on, they trap him and they crush him and they trap the guy that's selling into that. They're killing him. He's trapped now. He's now underwater. So we could get a pop here of 7 pips. It looks very eager for a rally here, I think. So it's like a high probability rally. But yeah, this is a real. It's such a tame market. Yeah, that Swiss franc depegging, dude. You know, that's like the Bitcoin going from 300 to 20,000, 19,000. Like Microsoft's not going back to the original starting price. It's one-time events. For the next 3 years, you ought to be able to make money from all this chaos here. Just throwing fucking limits in there. Yeah. See, it's obvious buy here. So one more click, and I'm not going to chase it. There's a 12 pip stop to make 14 pips. I'm going to stop just before they break out this thing. I'm not going to get trapped. So if you've ever been trapped in a trade, you never want to do that again. So I could put on the non-directionals. Here's a better setup, though. If you wait for the volatility to dry up like it did here, whereas here it's a little bit too rambunctious because this is a whole different dollar risk here. And if you have the sell stops here and they trigger, and you write it down, here's a perfect place for a robot to, because you could see this in 4 hours, but the robot that's sniffing every hour, you know, he might get in here. Now here's where he's got to have his 3 pip winners built in. Never survive it. So the breakout traders are trading into the vacuum. They make money every time, or the people that are going to get in the market like me when the market's quiet down. So quiet down, buy at the market. Even though you see this wick, yeah, I'm always trolling here with limits. 1 pip apart now for 8 hours. So it's about how thick are you getting in based on what's going on. There is obviously a vacuum here right now. From here is the current vacuum. There's the baby vac up top. So if they punch through here, as soon as we get above here, we know sellers are going to come in. If they ever make it back to the floor that they took out this floor. So they're going to come back to the scene of the crime. This is the ultimate target, just like this bottom was the ultimate target here. I mean, it's only able to squeeze out that, and there's not enough people. You know, it's kind of obvious that the party's over. There's zero pizza. There's just crust. You know, this one, there was 3 slices left. And then we drip down. And if you got a trade plan for this bullshit like this, you're making money because you got in. You're making money because you got in when the market's dead. Or you're just gonna scale into this thing. You're going to put 3K in instead of a 1K. You just go sell, sell, sell. You put a 28 pip. I'm missing a good buy here. But I'm not going to touch it. So I'll make $1,100 of margin. I'm going to let this go. I'm going to let this thing go. We've got 6 minutes left. The spreads are going to get ugly, though. I'm going to estimate they're going to take this spread to about 1.3. The euro's tighter than anything. Going into the... It's the most obvious trade in the world, is $0. If you don't like the way it's going, just go to a different time frame. You might as well go different. You're trading in a different direction. You're going to trade with it. You're either trading it against it on a swing trade on the weeklies and the 4 hour and the daily, or you're just nailing it. You can see the 5 minute against the whatever minute, and you're just nailing it. You're like, I know this trade. Like, see, now they just broke that out. If I bought now, I would feel like an idiot. So I feel like, you know what? I'm not going to let them trick me into this. So what I would do is I put in the buy limits like this. I keep on trailing buy limits, because whatever you think you bought, trust me, there's a better price. Whatever you think you sold, there's going to be a better price. The moment you sell it, it's not going to go your favor. So no matter how good you are, if you start, you're going to have to take a drawdown. If you get in really heavy on one ticket, you have to say, well, I can handle being down $600 because that's about, if you have a mental stop, where you're literally going to get out, and trust yourself to get out and not just go, well, maybe I'll just basically move your mental stop, which is, I think, the easiest thing in the world to do. Just see what happens. So it doesn't matter, because if it's a $300 account and you're putting a $300 stop in another account, what's the difference? The drama of depositing money, I guess. You're risking money. Here I'm up 192. So here I could just cash out. They might take me out in about 4 minutes anyways. But yeah, as far as this goes, you're going to have to find the paint. See how they trap those people? See? That's why I didn't buy. Look at that tick chart. So I'm trying to... oh, Jesus. Oh, wait. It's H.G. Wells there. I don't want to get in trouble. Jesus Christ. Anyways, I'm trying to read the YouTube commentary here. Yeah, I think it was about cancel replays. So, same thing on these 8-hour expirations, whatever you want to do, 12 hours. The more complicated the script, I suppose, obviously the less frequent you would drop it. Otherwise, you're going to, if you get carried away, you're going to just stress the account out. Because if you keep duplicating the same entry price, you're destroying the idea of trading a range, an area. This precision stuff with the see, it's going up now, so. But I could just see it. I'm like, we're on the 1 hour chart, it's obvious. Right, it's 5 p.m. In 3 minutes it'll be 5 p.m. I want to get a pop here. Take the margin down to like $950. We go up, and then as soon as we go up, I'm going to start putting in my the tablet. I have 2 pips deep for 8 hours. It's very aggressive, but I can just keep dropping that. Look at the tablet, drop a script. It's just like it's like you're putting out all these tickets because you know that you want to get in deep later on, so some of these last longer. You can put the 12 hours in, and they start maybe 50 pips deep. Depends what currency you're trading. You really have to size it for what you typically get in a retracement in one day. If you're trying to get paid every day on some kind of retracement on some currency pair or a breakout. So that was the pullback there on the tick chart. Now we're going to make another lunge up, I'm hoping. We got 2 minutes left. Nice lunge up. The spreads are going to get wide. They're already at 5 now, so I think it's going to go to maybe 2.5 here. 1 minute left, so the spread will get worse. Watch. Big freak out here on the spread too. So here's where people are like, man, they stopped me out of the trade. Look at that nice spike up. They take just went super tight, but this is going to get super wide. It'll go super tight, and then it'll just unravel here. looks like a nice. So that was a nice way to start off. And we are off to the races. Whatever Yellen said must have been fundamentally good for the euro dollar, I guess. Okay, just got a few seconds left. See, the spread just went to 14, so 1.4. There you go, 2.5. You see that? 2.5? 2.7. Oh, 5 pips spread. Oof. See, somebody just got stopped out. People with 5 pip stops, they're gone. Okay, now this is as wide as it gets, 5 p.m. right now, Eastern Standard Time. So there's a big vacuum between the bid and the ask right now. That's not a vacuum. But of course, when the people come in, it just tightens up. We're waiting for this broker for their next. They're probably, some brokers actually don't trade for like a minute. Waiting for some trades to come in. But yeah, that's basically the rollover. So they do close every day at 5 p.m. So if you were short today, the cash out, the ultimate cash out for you would have been down here as we climaxed into the floor, and then they ripped it up. So when Yellen spoke, it first went up and then it went down. So I bought that again because the 8-hour scripts that I dropped here still existed, and this is the 1-hour chart. So I had limits that were lingering here. I'm pretty sure that we're in 15 pips deep. So if I wanted to see what actually happened, come up with your favorite scripts and then make sure you pay attention to the comments that you created for them. Make the comment maybe the name of the script, or it describes what style it is, and then you see how you're doing, which ones are filling. Unless you're writing this all down, which I don't know who's going to write down 180K and pendings below you, but I can just see it on the screen. All these limits here are going to be here for another 6 hours, just been dropping them every hour. So as the market's dripping down here, I'm always coming in front with buy limits. We got below this today. So right now I'm long into the this broker shuts down for 5 minutes. It looks like I don't see any data coming in. So here we're coming in. I'm expecting us to take this vacuum. So this baby vac here. Here's the bear vac. You fill it, right? How do you know which one's going to fill? So you could, maybe you're looking at the price as moving, but it's moving through space. It's moving through the air there, I think. That's how I'm looking at it. Okay, so let me see if I can get this. Always something here. So yeah, talking about cancel replays. The smaller the bar, the bigger you get in, right? If you want to get in 5K, do you 5 times one ticket or okay? Well, that's yeah. If you have to trade really fast, like in this broker that I'm in, when I go to get out of these positions, because I'm in at 1K, it takes forever in my mind, like 3 minutes to get out of like 250K. That's like 3 minutes. Now, if you were in 5Ks, you probably had already cashed out some of those, and the ones that were lingering, you're gonna get out quick. But it wouldn't matter if you had predetermined exits and you never got out of the market. You never said, oh, this thing's just, we are at the top, we're going to get out here and turn around. That'd be completely different. Because if you just predetermined to swing trade it and just let it kind of, if it doesn't matter to you to get out in 3 minutes because you're not trading that big, if even if you made them 2Ks, but yeah, if you're gonna go, say 1, 2, 3, and 3 is gonna be your okay, so if you put a buy stop on a 3K, maybe that's got a scalp. It's designed for a scalp, so it's gonna take like 8 pips because it's such a big ticket. And the smaller tickets would be your swing trades. So if it was a trend stop entry, more likely to make that the 1K. The 2K is going to be your intermediate, and the 3K would be your scalp, because if you want to do this breakout where the market bursts up, you're constantly hitting a buy stop that lasts 15 minutes or half an hour. Market's dropping, and you're just contouring your buy stop entry. It's doing a cancel every 15 minutes, but if you drop it every hour, you're just kind of like, the market's going to have to make a move towards you at some point for you to get involved in just 1K. So the kind of the sloppy trades would be your 1K, and your precision, like, oh no, as soon as we hit this. But then again, you probably are going to write each single 1Ks if you're not going to get out where you hit a button and get out of the market. Like, if you're not going to build a position and dump it, then I guess you're going to have it so it buys a 1K. It makes 25 cents, and the next one makes 50 cents, and then the next one makes 70 cents. And whatever that is, whatever number you want to put in there. So all you got to do is hit that key 3 times, and all of a sudden you're making like $5 in 1 minute. You're making $5 in like 1 minute. But if these things stacking up, also the smaller the range, typically when you go into Asia, I'm going to put in some 8-hour and 6-hour buy stops, kind of risky because I'm probably going to get filled. But this is why maybe you want to build a particular strategy that you would know in your mind's eye what's going to happen when it's triggered, and maybe as complex as a non-directional thing where you're expecting the true range to go from a 10 to a 50. And even though you're going to lose at least 8 pip legs of this thing, you're going to make so much on look, we just went to 7.2 on the spread here. Look how brutal this broker is. But for me, I'm going to put in the buy. See, that was a nice. See how that was not a good buy at the market? It looked like it on the bid right there, because the spread is at 7. For God's sakes, nobody's trading it. So you have to wait for the spreads to tighten up around 7. So they get tighter and tighter, and the market starts to move, and it starts to go somewhere into the next session. See, now we're down $180 right now. We're down to $200 right here. So we were up 190. Now we're down 16. So, but I couldn't resist buying that little bounce. I don't know. Probably getting the same price here. It looks like I'm losing because the spread went wide, but actually I can't get a better price than I got earlier. And the ask line has not come to my arrows, so I can't even get filled on the pendings that I dropped out here about 20 minutes ago, just double clicking. So it's pretty safe to put in a 30-minute script that's 10 pips deep, because for you to get filled on that, it's going to take market's going to have to slam down. It's higher probability that that's a good price for that rate of change, and then it's probably going to retrace maybe at the exact same rate of change. So it may be half hour to get the market get down 10 pips, and maybe if you're trying to make 10 pips, right, 5 pips stop on that limit, just that one ticket. But I'm talking about putting in like complex arrays of orders. I mean, it's not going to be duplication. It's going to be like a serpentine. It's the it's just kind of a diffused. Nothing's going to get triggered in a hard manner. And with soft stops and soft targets, you've built in the ratios. Hopefully, you've got everything from a greedy ratio of, say, risk 1 to make 8, all the way to a bad ratio that is a higher probability so you can make something. Right? You're just trying to move inventory. You're not trying to. You need cash flow. So if everything is so tight, you can't just put 10 pip stops across the whole thing and say, well, you're asking too much. Now, if you put in 10 pip take profits with a 30 pip stop on a few tickets, where you're like, yeah, this is probably going to be able to survive. It's a dollar amount stop, looking to make $2, risking $3 to make $2. Okay, now if you can do that 5 times in a row, because you know where to place that ticket, and that's a hand placed order at a very precise level. That's different than just throwing out orders in front of a smashing down market. That's, to me, a completely different limit entry technique, because the hand placed one is going to be at the deep vacuums. It's very calculated domino, more of a domino theory. The market, how many dominoes can you stack before they cave in? You tip one and the whole thing's, of course, starts falling into the void between the dominoes. But the market can keep going in one direction. That's true. This is why the breakout, when the market quiets down, that's your time to make a decision. Say, oh, okay, well. But you're making, in my system, I'm making multiple decisions. Just like, how many turns did you make when you drove your car to the store? Did you make like 3 turns? Each one was a little different because you got somebody in front of you that's just first time they've ever drove, apparently. And then the people behind you that you can't even see there's a car behind you, they're so close. What's the weather conditions? Is the sun in your eyes? Is there a car weigh different amount of gas in the car? It's never the same. Spreads are tightening up now. I'm sure by 6 o'clock they'll get tighter, people come in. But this is what people complain about with these brokers. They don't get the spread problem. It's like the end of the day. I don't know if I would build a hedge here at this time of day either, because on stop entry, because the spread's 3. I'm looking for the ask to get. I'm looking to get trapped on the ask. I always think it's better to get limits that are 3 pips deep if you're bullish, or you just put a symmetrical 3 pips above the sell limit, 3 pips below to buy limit. It's just the frequency of the drop that you do. What is the stop? Is the stop appropriate for the currency pair that you're trading? For what it can do in the next 4 hours? Should you step in and wait until 6 o'clock, come in? Spreads tighten up, people are scalping. They're like, oh, look at, wow, tight spread. Let's get in, I'm already up on the trade. You'd be an idiot to put a buy stop in when the spread's 10 pips. Right now it's 2.8, so it's like 3 with the commissions here. Now they're tightening up. It's almost 15 minutes after 5 p.m. So I think they're going to tighten up from here on out. But I'm already in. I don't know if they stop me out or not. I'm already in this thing. I'm going to buy some more. I can't tell if they stop me out. I think they might have when they just made this. They just took the spread up to. I'll put some 14 pip stops to make 22 pips here. Yeah, I want to get in like at least $1,300. I'm trying to make 22 pips. So yeah, this is a lot of clicking, but they're tapping. But oh, they're 1,200. That's good. Then I'll just put more limits in. So I'll use the other $100 I was going to use for limits to get in. 4 pips deep. So they let you trade inside the spread, so it's actually putting a buy limit above the bid right there. Arrows coming in. Or they're not letting me put it in, I don't think. So the spread's too wide here, 4 pip spread. So, but yeah, this happens every day. It's 5 p.m. So it's a little shocking. Look at your account, you're like, God, I'm down? So I'm up $18 now. So we're only down $170 now. But yeah, that's I figured 2.5 on this, but we went to about 7 pips. Yeah, so I think it depends, because I really would have liked to get out. Last night I unraveled the position. I think it took 5 minutes because the market was slow, and there wasn't much liquidity there to get out. So it took longer to get out of the position. So if you're a person that builds this thing and then dumps it, or just want to. Also, I suppose to close all open pendings, I haven't tried that yet to see how quickly you can get rid of these tickets. Of course, in that, it's less exposure, you know. It depends how fast the servers are. If you have a fast broker, which these are not, there is a few people that have faster servers. I suppose you could be on some other connection maybe, if that mattered. But for swing traders, I don't think they care about the even the spread. If you have a 150 pip stop, you're so far from that. And that I would trade one case because I'm not going to get out of that thing. If I had to wait half hour to get out of a trade I was in for a week, I'm sure it wouldn't matter. I'm obviously trying to make 300 pips, so I'd be like, yeah, we're finally getting out of this thing. Finally getting out of Turkey, or what is it? Yeah, no shit. I mean, come on, people. We can't babysit you anymore. You know, Jesus Christ, people. And that's what's going to be the next complaint that people have is that you left too early. Okay, you know what? We're broke up. Better now than 3 months turns into 3 years. It's like, come on. If I hear you burp one more time, honey, I'm so out of here. I can't even be with you no more. Maybe that's what it was. So Turkish coffee is the problem. No Starbucks down there in the sense of baristas. Okay, so we're waiting for the euro to go up here. Underwater by $3 on this monster position. Okay, so it's like just a matter of time before they blow me up here. No, I got this 8-hour system I'm running. It's kind of like if you know what the order is that you drop, what it looks like, and what it's going to play out like, then you kind of have a pretty good idea. Like I said, you could have put the buy limits in based on this, and you'd be long the euro right now at that single price. Here, you did not get filled on the sell. So, If you try that strategy up here, no sell. I think if you're going to bother to look at the 1 hour chart, then you have to take into account this double bottom here, this very small range, breakout, pullback, right? You can't ignore that. If you want to ignore it, go to the 4 hour chart. Here's how we ignore that. So here's a cure. Too much noise? Well, this actually is noise. Put on the 4 hour chart. 4 hour chart tells it all. Look at how this rangy this is. These butchered people. There's only one breakout trade here worth breaking out. Very small range. You get in very heavy. Even a non-directional trade would have made money here. This is where you're getting a little trapped, but in the end, the expansion here is going to make up for it. Plus, if you're going to come in with limits. So if you're going to trade, also you could have built a bear's position by only selling the up bars. Here's a sell, here's a sell. Here we get a nice rally, so we're taking off here. Spread got wide, but we're going up. So this was a, you either had your limits here waiting to get filled, or you were going to sell, and hold. I don't think I'd want to put a sell stop there. Not if I'm already up on this, right? Am I going to add to it here, maybe? I'm thinking this vacuum is my thing. So this is the baby vac. Baby tickets. Monster vac. Monster tickets. If you see this giant hole, you know that's going to be an insane drama up there. Look at how many pegs up here. Then we trap in this vacuum. Right? Didn't they just trap no nonsense sold here? Got to fade no nonsense. Sure, no nonsense can be right when he buys here and he rides it to here, but you don't want to be no nonsense on every trade. Just can't pay the rent. You can't pay for your computer you're using to do this stupid. We used to have to pay $270 a month just for data. I must have spent $500. If I put on 3 trades a month, it cost me like $500 a month. This stuff here is like free. Risk free. It's high risk. Are you kidding me? Guaranteed losses of $500 a month just for commissions on 3 tickets and data feeds. This is the floor we got to overcome. We got to break out this small bar. I'm not putting a buy stop here. Even though that could break out and go up, at this point of the day, it makes no sense. So we start out the week, fall out of bed here. Breakout traders make some few pips. I'm buying this plunge. Then I dump. Then I bought again. Then I dumped. Okay. I didn't sell. I cashed out. Then I bought again. And here's where, okay, so I should buy at the market right now. I'm going to come at the market. We got a tight spread now. It's 7 minutes before the bottom of the hour. I'm going to load up. Another $100. Because they didn't fill my limits, I'm going to put my $100 of margin in right now. I'm coming in with these 8 to make 14, 7 to make 11. This is my 7-11. 6 to make 12, 6 to make 10. I got one that's 5 to make 14, 5 to make 12. That's a nice trade. Putting like 10K of that right now. Okay, there you go. Alright, 6 to make 10. Let's ride this fucker. Alright, so let's go. Come on, people. Get it together with this fucking euro dollar already. We gotta take out this high here. That's another thing. If I'm trading with the smartest people in the world, there's no fucking way. They should be buying more than I'm buying right now. Don't they see what I see? Trading with the smartest people. No, I'm driving with a bunch of goobers in traffic. Hey, look at, he says it's going up. No, he said it's going up. No, he said it's going up. Come on, people. Come on, you fucking idiot traders. You're trading with the smartest people in the world. What the fuck are you? What chart are you looking at? It's obviously an uptrend, and these fucking idiots sold it off. Smartest traders in the world. Wow, look at the spread just went psycho tight. I'm gonna get in here with psycho tight. Buy stops. Buy at the market. So I went above and beyond. $23 past my $1,300 limit. Okay, I refuse to trade anymore. So I'm stepping away from the cake table. All that cake. So we're waiting for this thing to waiting for the yeast to rise. Here we got 5 minutes to the bottom of the hour. I'm expecting some nice. I want to see some price action in my favor. I want to see 109.60 on the quote board. Or everybody's gonna have to stay after class. There'll be a pop quiz. No Nonsense is gonna get the blackboard out and tie you down. God, can you imagine that guy? His wife must be like, he must be, when he comes home, he's like, "No, honey, I have a note on the fridge. Now, before you ask me a question, I want you to read every note on the fridge. If you have to, start over from the beginning." Okay, no nonsense. Okay, Mr. No sense. And he's like, "Yeah, I had to put a stop to that. People were asking the most retarded questions, and I've never said that. I've never said anybody asked a retarded question unless they were abusing me. Yes, okay, but he's getting people that are sending him like tea and crumpets, and they're going, I don't know if that's a good thing, but they're like, yeah, man, can you tell me, no, sorry. No, sir, we can't do that. I'm not going to give away what I spent all that time building. We got 3 minutes to the bottom of the hour. So, I don't know. It's so cute that people think they built some holy fucking grail. Their indicators are so special. Go ahead, I guess, sell them. I don't know. If you can't figure out how to put a moving average on there, I guess you're in trouble then. So here's another thing that might help is if I change the indicator to list on, I'm going to take my moving average and put it on the highs. And this will be like the what Alexander Elder does. The bull power, the bull vacuum, the bull vac. I call this the bull vac. This is another way to be able to see the vacuum real easy, real quick and dirty. That hole forming above. So if you're trading at buy stops and you're doing cancel replace, boom. But you see how you got to take something off that. When they fill that hole, there's a double bottom on tops there. So it's a double vac bottom. Right, 2 period. Here, pull back, small ETR, break out, we trap these people, then we go after that. This is also the Williams fractals is going to be here. But if I were to put the lows on, then you're going to look at, okay, well, it's getting tight, and you can see that, what that's going to look like. And it's really a very tight Bollinger Band is all it really is. It's literally the hole. So we have this hole here that's forming. This one is not really that big. It's really about the fact that it keeps crushing into this hole. So you change time, like if you're going to stack up buy stops on this drift down, because you want to get involved to the long side. I don't know how much they pulled that back after they did that initial breakout. But that's a different trade than if you're running the sell stops and you get filled here. Okay, you're getting trapped. But you wouldn't put sell stops in on these big bars, I hope. Would it be cool if there was an indicator that it shouldn't be too hard to write this, I'm guessing. I don't know. But just make the small bars black. Like any bar that's under 10 pips is black. Then you could tell somebody when you see a black bar, okay, black bars matter. Small black bars matter. So you'd say they would just naturally be small. Put up buy stop, and just hit this button. Actually, just hit a button. It's going to put a buy stop and a sell stop. Okay, we're going up here, so I'm going to buy some more. My 5 pips stop to make 12 now. I'm anticipating a rally into this line. We're going to make a higher high. These are the highs only. Look at this beautiful double top in highs. But what I'm seeing is we fill that vacuum. Not as important as this vacuum that gets annihilated. And if you bought here and you could hold through this, then you eventually made money into this vacuum. So you can see them really easy, just running a moving average on highs. Sure, now if you wanted to do the no-nonsense way, you would make this a 3-period moving average of highs. I think as soon as you do that, you destroy the whole idea of breakout trading. You can imagine if I made this a 3-period moving average, what it would look like. It would look like that offset bullshit, be all laggy, crossing over, and prices punching into it. It's trying to catch up. I had to wait for my indicators to catch up. It doesn't make sense. You should be buying right now because this just broke out and it's kind of tight spread, and just keep buying it. Risking about 75 cents a trigger pull here. There's a buck to make like a $1.20 here, or 85 cents depending on the broker. Here's a good trade. 7 pips to make 22. 7 to make 7, not too good, pays the rent. 7 to make 9. There you go, another $60 past my 1300. Okay, the buying spree's over. It's 3 minutes after the bottom of the hour. Let her rip. I refuse to buy any more. Okay, I think we sufficiently scaled into that. Another thing is if you put this moving average of highs and you go to like it makes it very easy to trade the 5-minute vacuums, right? Also that, I'll talk about that vacuum under the floor. You can see it really easy. Where you actually get a vacuum underneath the other one. It's pretty extreme. So here's when Yellen spoke right here. The Fed. So just before they came out, we were sitting here, we smash up. We know that there's sellers here. Then we rip back. So I'm buying this plunge. Or the buy stop bots were stacking up. They cashed out, let's hope, before they came out here and smashed their stops. So the problem is that if you get in here, you got to have some kind of exit plan where you're getting out here, because otherwise You run the same trade here, and you never got stopped out, right? So every situation is unique. This plunge here is so steep. If you put a buy stop in there that lasts 15 minutes, because that's the 5-minute chart, you know you got filled. But you don't want to have this ticket last too long because you're getting trapped there. So you had to have buy limits sitting here. You had to buy at the market when it was maybe closed here. You can't see that now because I'm pure bars and highs only. Then you had that little vacuum. So I bought that. This is when the spread got really ugly. Right, that's 5 minutes after 5. The broker actually went offline for 5 minutes there. Okay, now it's 5 minutes after the bottom of the hour. Now, I'm not going to buy anymore. Luckily, I'm up $113 even after buying all that plunge just now. But that's it, I'm done buying. It's very hard to manipulate the charts also with all these tickets on here. Okay, let me delete the objects so you can see exactly this. This broker's just torturing this platform. But see this quadruple vacuum. The valleys are deeper. Attempted breakouts. Can't get past this so-called Williams fractal. See this vacuum. It's under or this is the deeper one, but you can't see it in this chart. You'd have to go to the 5-minute chart, but it's actually this is this big hole. So here you're running the buy stops if you're going to do the buy stop entry and buy limits if you're trying to accumulate here. So here was the big stop hunt. If you could have bought this, but you couldn't, this price was not available. Because I think the best price was here when this wick was here, so it's a little deceiving to say you're going to buy here. It's spread dependent, but when you say you're going to sell there, it is not. If you sell here, you know you got filled. You just don't know if you had a tight ask for your exit, for your stop. You don't know if you survived some of these moves, especially when the market closed. You could have been in a so-called winning trade because you did sell up here, but as soon as the spread got wide, so the backtesting that people are doing, they're not taking into account the fact that at 5 p.m. the spread might get wide. So this not backtesting is just silly. Just trade. I mean, for God's sakes, what people are spending on these dumb mentorships and stuff, why don't you just go fucking trade the market? Just go play guitar. You don't need to fucking take lessons. Jesus. I mean, how much does your guitar cost? Did you buy a fucking $10,000 guitar? I'm gonna be a famous rock star. You don't understand, man. I'm fucking really good on guitar. I can spell it and everything. So, the 5-minute chart, you know, buy stop. The pressure's building up here. See how dramatic that vacuum is? Here's the vacuum underneath this. Okay. So extreme. Look at that. Pressure building up below the 50-yard line. And then, bam, there's a rip up. Nice cash out. So, Yellen speaks, rips up, comes back, rips again. Trapping these guys, trapping these guys. So people that are selling the larger time frame breakout, after all the volatility, they're getting their ass kicked. On some level. So this is a 4-hour chart. It has more to do with this price. So this slot goes back to here. We never make it past here. But we make it under this, under that, by here. So here you're up on that trade right now. This one that you bought, because this is the deeper slot, the deeper vacuum, this is the deeper, deep, 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 then nothing, right? And when you come after this, you poke through this Williams fractal, you poke through this one. See how they come back and they retest that breakout point? So the confirmation traders get in here. When this thing went screaming up, tops become bottoms. For them, they're like, you know what? Plus, I'm buying this. My view is buy this whole pullback area. There could be a 618 in there, but you know what? You better draw your fib here. Your fib has to be properly drawn to get. But see what a Fibonacci denies this whole area. Unless you got 40 fibs in there, okay? Otherwise, you're going to miss out all that buy. Okay, so it's going up. I'm not going to chase it. It's going up. Not chasing. Done buying. We're going to take this out, and we're going to keep going. Into the night. Like Benny. Into the night. So, I'm looking for this move now. Take this out. Keep screaming. We got to get to this price, to this price, to this price. Then we got to go blowing out the top. By the end of the week, we should be up another 100 pips on this currency. Obviously. This is the best sell-off pullback I've seen so far this week, and I'm sure just like the most volatility. It's funny that after Yellen came out, we were already down here in these prices. So I'm looking to get above the 100-yard line here. My ultimate goal for this currency pair is obviously to start selling above that. Right? I think that's painfully obvious. 25-yard line, selling all the way to there and beyond. So, the next obstacle here, this is also the place I'm scalping out. You can see my exits here already. Sell, sell, sell. And I don't know how much a pullback we're going to get if we ever make it through that. So to make it through that, we have to kind of still get some more zigzags. We may never even make it. I'm at least looking at getting out of about 25% of this position, which dollar-wise is quite a bit by here. But London opens here. Maybe we do go screaming. By the end of the week, we can just have to weasel around. It seems to me that this is the looming vacuum now. And this is so much pressure here. The other view is this one. This is the other big vacuum. It's currently pending and looming. Because if we keep dripping down and we fall through this, wow. But then once again, I'll buy here, I'll buy there, I'll buy there, and I'll buy there. And this is going to be a huge pocket of buying. That is the deepest vacuum. We may never revisit this, but this is a big deal down here. It's also at a big round number. This is the top, became a bottom. Again. This has to make it to here for me to take something off. This is like a buy right here. Look at this. Just pulled back. So if I wanted to buy a 2K or 3K here, I could add on to it maybe. Or would I put a buy limit here? So that's the thing. You know what? You get lazy. I'm already in. I'm in $70 past my where I said I'd be margin usage. And this has to prove itself as a double bottom. The whole time it goes riding up, I'll be cashing out to here, to here, to here. Actually, very few tickets. I'm only trying to make 20 to 40 pips here. Not trying to make that many pips. because the idea that we're going to make it up here, I've only got a few tickets like this that are targeted way up there. I just didn't really commit to that lofty goal because I know there's going to be a pullback of at least 5 pips before we make it through here. So as soon as this thing's cashing out and I see I'm only in $900 of margin, then I'm going to put aggressive buy limits beneath the market every 4 hours, 8 hours. And some of those are going to be scalps too. So I don't have to ride the whole wave. In other words, buying this plunge here, loading up, and this is the vacuum under the floor here on the big picture. Getting really heavy in here. Scalp on something there. Ride it like crazy. Dump. Reload. So that is my sell. Cashing out there. I get a nice pullback here. I'm going to let that go. Let's see where we're at here. We got, it's only 5:45. We got to make it to 6 o'clock. Got to make it through January. Got to make it through February. So about $163. Pretty good considering how much I added to it. So on the 1 hour chart, looks way more hopeful. See, we had this little vacuum forming here. Bull vac on the I keep forgetting that that's the high, so it's not actually where the close is, but the close is pushing up against the high. If I put a closing bar on there, so you can see they're kind of banging up against the ceiling, just about to take out that little pressure zone. So that is a double bottom on highs on the 1 hour chart. Also trapped below this vacuum now, this floor, this structure. Sellers did come in there, pull it back, but now this would be where I'd start buying. If I'm not in this thing, I'm certainly not going to sell here. I think if the spreads never got wide, then this would have been a breakout. So there's another big fallacy. People look at this chart and go, I back tested this thing and I got a signal here. I don't think that's a valid signal because you're really going to get screwed here. If your spread goes to 10 and you get filled on a sell here because you're looking to low volatility, that's bad. That's why if you wait till 9 o'clock, when the 4 hour chart updates, then that's going to make more money than no nonsense system right there. Mechanically trading the 4 hour chart at 9 o'clock with multiple exits is going to outperform any algorithm, right? Because if your criteria is that the bar has to be a certain pip amount, you know the exact metric of that trade. It's just hard written prices. See, and not as many trade entries. You just have to look at the chart 6 times a day. So here's your, hopefully you don't have to back test this setup, but when you get smaller the candles get, the more drama there's going to be. It doesn't mean that it went up from here. Now this is a typical flag people would get into thinking it's going, but if you non-directionally trade that, or even if you do go in there heavy, you have a very tight stop. Look at the bearish move on that. 4 hours clean down and complete reversal. So you could have either bought on limits, trailing, pick up these tickets, crush, sell it out, or you just have to figure what's most comfortable for you. Do you mind having the market come to you and coming into these orders that you've got pending here, these buys? Are you okay range trading it? Because you had to really range trade this thing. You have this spectacular move here. You had to know it's going to probably get a little choppy. If you got a chop plan. Okay, this is kind of getting tight now. We're looking for, we have 11 minutes before the top of the hour, but 6 o'clock, I want to take out this bar here. So another prime example that I am not trading with the smartest traders in the world right now. Maybe they don't come online until later on. And then they'll realize the pattern that I see, how I'm right. And they will join my idea of support and resistance. That's just most people just don't know what I know. What are you going to do? Here's a buy stop I rarely hit. This is a 2-hour buy stop with a 12 pip stop to make 22 pips. So getting it about 2 or 3 pips above, so it's actually a 15 pip risk to make 22 minus the spread again, so you make about 20. So you're really risking, all these numbers actually are just without the spread and commissions, so it's just what the script says. If you want to make them realistic, that's a whole different world. If you want to actually get these perfectly, as perfect as can be, they would be perfect if you had a fixed pip broker. But they're going to give you consistently bad spreads all day long. But they're consistently bad. You want consistency in trading? Yeah, just get a... Also, when you pull this trigger, see it set that to 1K, because if I use a 1K, it'll set this to whatever the last... You can set that setting, so whatever you run, the last ticket you run ends up being the size of that one click. Because that's a setting in the options thing. Okay, so we're just waiting. I got 9 minutes to the top of the hour again. Creeper gear here. Gold looks like it might have it's dwindling here. Oh, it's coming back to life. Here's some pressure building up. It looks like there's going to be a stop hunt for the bears here in gold. I'm going to pop up here and trap all the bulls here. I would be a seller there. Looks like gold could take a nice step forward here. Got a trend line, possible channel riding up. Don't trade it, but you know. I'd already be long. Like I said, my buy limits are trailing on the dailies all the time. Whatever I'm trading. Now here, I don't think I'm going to... I think if I got filled long, I'm a bull by default of the market coming back to make me a bull. So now I'm going to hold. And as soon as we get above here, I'll start cashing out. And when we get above here, I'm going to sell again. Right? So buying on dips, if you buy the trap on the Williams fractal, you are up on that trade all the way to here. A lot of selling pressure, selling vac up here. Pulled it back a little bit, not much. Looks like we got a nice trend line about to break this trend line on gold. So yeah, I could see an attempt at this number. Okay, now we're making some money. We've got 8 minutes before the top of the hour. The spread looks like it just got ugly. Let me get back to this. Is another reason I don't trade gold. I can't look at what I'm in. I don't like it. I want to see what I'm doing here. I'm supposed to get to 60. I said that was my target. 109.60 on the euro. So that's why I quit doing it. Every time I did that, you know, it's like the girl you're with, she finally says what you want her to say, and you can't be with the other girl. You just stare at the other girl, and then she finally says, what did you finally say to me? Damn it, just when I was almost going to pay attention to you. Spread got kind of wide there. 1 point so pips here. It's freaking out because 6 o'clock's coming. The 6-hour robots about to take out this. Looks like they trap people here. So look at this breakout. That's definitely the trap. See. So I say back testing. This looks like a sell here, but you hopefully are not putting in a hedge strategy at 5 o'clock. Right. It looks so you would have got trapped long and short on that. Now wait for a breakout. Wait for a breakout. Yeah, the last time I was recording, I hit the stop button accidentally, and I tried to restart it, and it's kind of like, you know, the momentum's gone. I was like, oh, fuck. And I don't know how to splice it together. I don't have any splicing gear. YouTube used to let you splice it together, but the render time was like longer than waiting for the second coming of Jesus. So I just quit, and I just like, I'm out. That's why you can't take me seriously, because I don't have any pro editing video equipment. Yeah, so I'm looking for that spread to tighten up here in 6 minutes, 5.5. So that's it. Yeah, definitely there is no vacuum. If you go to the daily, we are just sitting like this, see? So yeah, looking for that. That's why I would trade the small bodies on the daily more than the highs and lows. But see, here's the trap. So you can see them trapping here, but I'm not looking at this little mini vac here. I'm looking at this. Once they fill that hole, it's done filling. This was the original floor of that. I don't know what time frame this guy's on, but it's just going to be less holes on this chart. Here's the low, the highs below this high here. Huge imbalance. Okay, I'm looking for a rally here. See, every time the spread fluctuates by a half a pip, my balance fluctuates by $50. Look at the tick chart flipping out as you come into 6 p.m. 4 minutes. What? Did I crash my computer here? Wait a second. I can't trust this fucking Bill Gates got into my computer and shit. Okay, so yeah, I guess that's what time it is. Shit. No patience for this. So it's gonna be 5 minutes here. It's gonna be 3 minutes left here in 2 seconds. There you go, 3 minutes. I'll go to the 1 minute chart. I don't know if I can do that. Let's stretch it out too much, so just have to go back to the 1 hour chart. Looking to take out the high of the last hour. All right, 2.5 minutes. We're halfway through a 5 minute bar. Let's go to the 5 minute bar. Okay, we're looking for this thing to take out the last 5 minutes now. So here we have a triple vac. Look at the lowest true range. So here's when the spread got wide, the first time it tightened up. Just about to take out the high of that previous. We got minute 50 seconds left. Here we go to 15. So you don't see anything like that on the 15. You're just seeing all these zigzags. Here you can see all the scoops. All right, that should give us some lift. That giant sucking sound north. That's what we're looking forward to. The 1 minute chart. Look at this nice blast. But you can see the spread. That's not good. Alrighty then. Yeah, go watch Hilton trade. He's got a spread of like 3 pips, and he's pulling the trigger at the market. He's down like $500. He's getting it so huge. Okay, 45 seconds left, and let's see what we can get out of this thing. 5 minute. far as I'm concerned. They got to take out this, this, and this without taking out this. Got my tickets down there to buy, though, for 8 hours. Below this, if we go down, I'm buying more. All right, here you go. 5 seconds. Jump to the 1 minute chart. There you go. 5 seconds after 6 o'clock is when it goes berserk. 5 seconds between candles. See that nice tight range here, compression on the 1 minute. Are they trapping people? The markets are opening. Let's cash out of something already. Okay, we got to pop north here for me to make money. I'm not buying anymore. I'm not going to chase it, that's for sure. There's a 15. There's a 5. See, I'm not one level. So we got to go up. Must go up here. Start chasing down these peaks. Yeah, I got to take out this wedge. So this is the bigger vacuum. This is the inside. Got to go like that. By the next hour, I'm going to give it an hour to do it. So I'll give me plenty of time. Plenty of space on that. So we're going to let that go. Come back to it. Check it out later. See what we got. Let that cook.